Then friends, I move to 11.1a. What is 11.1a friends? What is 11.1a is, capital asset is there for a charitable trust. Such a capital asset is sold away. Consequently, trust got the capital gains. Now, once a trust is getting capital gains, can it get an exemption? Yes, it can get exemption, provided it purchases another capital assets. Now, the point of interest here is, with what amount it need to purchase the capital asset. Let us suppose an asset of 10 lakhs is sold for 12 lakhs. Capital gain is only 2 lakhs. If I again purchase a new asset with 2 lakhs, will it be sufficient? No. The provisions are almost similar to your 54F, where 54F encourages you to make a complete investment of net sale consideration. Of course 54F और यहाँ पे क्या अंतर है, डिफरेंस है. 54F में proportionate exemption you are giving, but here how to calculate the exemption is very clearly given. What is it? In case if the entire net sale consideration is used for purchase of the new assets, then entire capital gain you are giving the exemption, or in case if more than the net sale consideration you are investing to the extent of the capital gains, it gets exempted. But in case if you are investing less than the cost of that asset which is sold away, then the balance part becomes taxable. Balance part becomes taxable. Of course, in this context, I can give you few examples. Let us suppose cost of the old asset transferred is 6 lakhs and the amount that you invested is 9,60,000. So 9,60,000 minus 6 lakhs, 3,60,000 exemption you can take. Whereas 9 lakhs is the amount invested and 6 lakhs is the cost of the old asset, then 3 lakhs exemption you can take. In any case, what we are expecting at this juncture is the investment in the new asset should be more than the original costs. Only when that happens, that difference between the investment and the original cost, we are going to allow it as an exemption. Sir, okay sir, I invested less than the original cost. Then you are denying the exemption on this pretext. Accept it. Then on any other pretext can I get exemption? Yes. If such capital gains are being applied for charitable purpose to the tune of 85%, then on that pretext you can claim the exemption. One straightaway situation is again you reinvest in another capital asset, or other way round you apply the same for charitable purpose. This is what you need to write. 11.1a, section 11, subsection 1a. Right. See, sometimes what I feel personally is my Ekalavya Sishas, e-video students are more fortunate. Why? These lectures are being taken on cold winter, early hours of the morning. Then what will happen? Automatically that we are still in the sleep, despite of my effort to make all of you to wake up. There are certain situations when I am noticing the students opening their big eyes and still sleeping. But friends, try to understand, bear with me for 120 hours. Keep yourself awake. That's what Vivekananda is saying. Okay, because you are supposed to write the exam, right? Keep the smiling faces, get back into the class, write down, friends. That is, when Charitable Trust makes a sale of a capital asset, and gets capital gains, then such a capital gain gets exempted where entire net sale consideration is utilized for acquiring the new capital asset. Then next point is where only a part of net consideration is utilized, then the amount of exemption is equal to amount invested in the new asset minus cost of the transferred asset. When I talk about the cost of the transferred asset, how to ascertain the cost? Already you studied the capital gains topic, cost, where it is being discussed, section 49, section 55, and we have also 48, which discuss about the benefit of indexation. So when I say cost of the transferred asset, due consideration need to be given for section 48, section 49 and section 55. Then friends, I move to 11(1)(b). What is section 11(1)(b)? Write down section 11(1)(b). Consequences if income not applied for specific purpose. What is this? That is, just before we studied one point, If income is received at the back end of the financial year, or if the income is received, accrued but not received, you can apply the same in the year of receipt or in the year subsequent to that particular year of receipt. You exercise your option saying that yes sir, I am going to apply it for charitable purpose. And if you don't apply, having exercised that option, if you don't exercise such kind of amount to such kind of charitable purpose, then what will happen? It will be deemed to be the taxable income of that particular charitable trust in the year in which it is being applied for other than the specified purposes. Write down. Where option is exercised, under clause 2 of explanation, to subsection 1, and amount is not applied, then such income shall be deemed to be the income of the previous year, immediately following the previous year, in which such income is received. Now I move to the another important aspect, friends. See, exemption if the income is accumulated for specified purposes. This is being done with 11.2. Try to understand what the point is. Krishna Reddy gave 10 crores for my cancer hospital. But is it possible for us to construct in 1 year the cancer hospital? Probably it may take 2 years, 3 years, 4 years, 5 years. So what I have to do? That is, the trust is having in its mind for what purpose this amount is to be spent. Then it can make an application to the income tax department. Sir, we got a huge donation. Of course, that fellow is not giving with a specific direction. He gave a huge donation and said, you use this donation for some charitable purpose. अब हम क्या सोच रहे हैं, उसको लेके एक कैंसर हॉस्पिटल को कंस्ट्रक्ट करने के लिए सोच रहे हैं, मगर वो करने के लिए तो 3-4 साल रहता. तो you please allow us to apply the same for that particular period of 3 or 4 years. Once an application is made, that shall be deemed to be an application of such income. Only thing, strictly in a disciplined manner, you have to complete that. But can I say, I got 10 crores of the donation, I want to construct the cancer hospital, give me 20 years of time. The point which I would like to drive here is, in any case, the time cannot be allowed beyond 5 years. When you have the income accumulated for a specified purpose, the time cannot be allowed beyond 5 years is a point. Write down. Section 11.2. Exemption of income accumulated for specific purpose. Exemption of income accumulated for specific purpose. What is it? That is, when charitable entity accumulates the income for a specific purpose, then it should, by a notice, in writing, comma, in prescribed manner, intimate to the assessing officer, the purpose for which income is accumulated, and the period for which it is set apart, and it should invest such accumulated set apart income in the investments specified under section 11.5. Then friends, noteworthy point there is note. In any case, the period of accumulation cannot exceed 5 years. Friends, please do remember, after stating that I am going to construct a cancer hospital, after 3 years I can't transfer this amount to another society. Inter-trust donations, when you call it as an application of the income, only when it is made out of the current year income, not out of the accumulated income. Other way around, every trust will say that we got this income, we will apply, please wait for 5 years, and in the 5th year they will open a new society and again transfer these funds to that new society. Again that new society will say, we also require 5 years. A chain reaction चले जाता. ये सोच के क्या बताए, inter-trust donations shall be treated as application of the income provided it is being done out of the current year income and not out of the accumulated incomes. See, there are certain reasons why exemption gets withdrawn. Few of them are being given in section 11.3. What is it? See, when we come together also try to understand, we have to come together with an MOU, Memorandum of Understanding. Any relationship, in my personal opinion, other than the childhood friendship, which can go without MOU, after we attained the majority, 18 years, cross 18 years, any relationship should go by MOU, Memorandum of Understanding. And please remember forever, any relationship which gets started with compromise ends with a conflict. Anything which starts with a compromise ends with a conflict. That's why I always advise Mr. Krishna Reddy, don't get married by compromising, because it could end in conflict. Friends, जो relationship conflict में शुरुआत होता, वो compromise में end होता. Got the point? So that is the message for the day, and I come back to the point. The point here is like, जब exemption withdraw होता, जो वादा करे वो आप निभाना, you are not able to maintain on the word, keep up your word, then automatically exemption should get withdrawn. You said, I am going to apply for a specified purpose. I have a specified purpose. I am accumulating, and you are not using the money for that particular purpose, or using the money for some other purpose other than the purpose which you have specified. Then the exemption is to be withdrawn as a point. Or otherwise, we asked you to do one thing. Accumulated को लेके स्पेसिफाइड इन्वेस्टमेंट्स में डालो, नहीं कर रही. 11.5 मोड्स ऑफ इन्वेस्टमेंट में आप इन्वेस्ट करना ये एक्यूमुलेटेड इनकम को, यू आर नॉट डूइंग इट, देन ऑल्सो exemption gets withdrawn. Write down, friends. That is section 11.3. Section 11.3, withdrawal of exemption. Withdrawal of exemption. Withdrawal of exemption. That is, if accumulated income is not applied for specified purpose or utilized for other purposes, or it is not invested, in specified investments. It's not invested in specified investments under section 11.5. Then friends, now the question is, another important reason what for the exemption gets withdrawn? The accumulated income is being donated to another trust. That also you complete it. That is, trust make donation to, or trust makes the donations to another trust out of accumulated income or out of accumulated income. See, what is the year of chargeability is the most important thing. Okay, I did something wrong. Having told that I am going to use for specified purpose, I have not utilized, or utilized for other purposes, or not invested in the specified investments, or transferred to another trust. Then when the exemption is getting withdrawn, then that income gets taxed in which year? That is, point here is, it is going to be taxed in the previous year in which, what is it, it is applied for other purposes, or having taken the time, you are not done the same within the time. So in the year immediately, what is it, following the expiry of that particular period, it will be, or in the year in which such amount is given to the another trust, that year it becomes chargeable to tax. Write down chargeability. Chargeability in the above situations. Chargeability in the above situations. Once exemption gets withdrawn, it shall be taxed as the income of the previous year. A. When it is applied for other purposes, or does not invest in specified investments under 11.5, or makes inter-trust contributions. So that particular previous year. Only in one situation, in the following previous year. What is that situation? Write down. In case if the amount is not spent, within the prescribed period or within the specified period, then it will be taxed. In the previous year, following the expiry of the period, for which income was so accumulated income was so accumulated or set apart or set apart. Now I come to the another interesting point. This is very, very important. Keeping in view of the exemption, keeping in view of the amendments which are being brought in the definition of charitable purpose. आज charitable purpose का definition आप देखें तो उसमें एक बात है, यदि आप commercial activity कर रहे हैं, if you are doing a commercial activity and getting income, even if it is applied for charitable purpose, we will not give the exemption बोल के our charitable purpose definition is there. But everything comes with an exception. तो हमारा 11.4 क्या बता रहे हैं? Property of the trust, when I say, if the trust, the property of the trust includes the business undertaking held by it, then if out of that particular business, if it is getting any income, if it is applied for charitable purpose, we give the exemption, provided two conditions are to be met with. What are those two conditions? Such a business must be incidental to the carrying out the charitable purpose. That is one condition. Second important thing is, separate set of books of accounts are to be maintained for such business. तो बात क्या है? कल्याण चक्रवर्ती एजुकेशनल एंड वेलफेयर सोसाइटी, which runs educational institutions, can open a AC library, collect the money from students who are using that AC library, can make income out of it. Running an AC library is a incidental to the objectives of the trust. If Kalyan Chakravarti Educational Welfare Society starts by the side of its college a wine shop, so that is not a business incidental to the carrying of this particular charitable activity. Because several charitable trusts are there, they publish the books, they make sale of those books in order to popularize their way of thinking. These are all incidental to the carrying on the business, that are incidental to the carrying of objectives of the trust. Then there is no problem. So this one should be very, very careful. Because generally if we only read a charitable institution cannot carry out a commercial activity, in case if it carry out a commercial activity, then the exemption gets withdrawn. No, no, no. If you go and see, beautiful exceptions will be there. Or one of the amendment is what? There is a threshold limit. Up to that you can have receipts from commercial activity. That point also I will drive. Because that as an amendment, usually when I discuss charitable trust taxation, first I start with the definition of charitable purpose, but this time I am keeping it at the end because there is an amendment. And what you listen at the end, definitely you will remember. That is my good intention. Because from childhood I am looking at Mr. Krishna Reddy. Whenever I ask him to read the theory subjects, he says, "Sir, I will read only in the last 2 months." Why? Even if I read now, I will forget, sir. So I will read in the last months. Only I will do now practical problems. जब भी देखो उन्हों cost and management accounting book लगा के, whenever he is traveling in the audits also, he only looks at the costing book. I asked him, is direct taxes is a prohibited subject for reading during the months of November and December, he said, no sir, there is a problem that I will forget. That's the reason why important things I am discussing at the end, so that my beloved Krishna Reddy will remember this. So dosto, लिख लो 11.4. What is the 11.4? Property held under the trust. Property at your final level, this is important. Property held under the trust includes business undertaking. Includes business undertaking. Now, that is assessing officer. Assessing officer, that is property held under the trust includes business undertaking. Business undertaking. There you write, assessing officer shall have the power to determine the income of such undertaking in accordance with the provisions of the Act. In accordance with the provisions of the Act. Then friends, what is it? If income so determined is in excess of income as shown, is in excess of income as shown in the accounts of the undertaking, then such excess income becomes taxable. What is this point, friends? This point is, when there is already exemption, why people undisclose, sir? A natural doubt that student may get. See, he has not applied the same for charitable purpose. That's the reason why, although he received income, intelligent accountant kept it in advance. Income tax officer is going through it and found that it is in fact not an advance, it is an income. Generally, why people will resort to such kind of things? When they are not able to make an application of it, then probably they may feel that better we give some other name called as suspense, advance and all, and as and when we make an application we revert it to the income and all. But if you resort to such kind of the dramas, assessing officer has got a full power to go through the accounts and can see income, is it computed in accordance with the provisions of the income tax law or not. And if he makes a computation and he observes that actual income is in excess of the disclosed income, to the extent of that difference, he is going to tax it, although it is a charitable institution enjoying the benefits of exemption. Then friends, as far as treatment of the business income of the trust, 11.4a, write down 11.4a. 11.4a. treatment of business income of the trust. Treatment of business income of the trust. What is it? That is as long as the business is incidental to attainment of the objectives of the trust. Attainment of the objectives of the trust. And separate books of accounts are maintained. And separate books of accounts are maintained by such trust, then such business income is entitled for exemption, subjected to satisfaction of other conditions. Subjected to satisfaction of other conditions. See, when we say specific modes of investment under section 11.5, I am not asking you to write because there's a very big list. You can remember it, and in fact in a practical situation this becomes more important. You should know where you have to keep the money, accumulated money. For that, what we say, investment in government saving certificates, deposit in any post office savings bank account, deposit in any account with a scheduled bank or a cooperative society, investment in unit trusts. Like this, we have a list of places, deposits or investment in any bonds of a public company formed and registered in India with the object of providing the loans for long-term financing of infrastructure in India. If that company has got activity of giving the loans for infrastructure, in such companies' bonds you can make the investment as a point. And investment in immobile property is also one of the investments specified under section 11.5 is a point. Now I quickly move to the other aspects. Of course, aspects which are very, very relevant from the examination point of view only I am making the students to write. Other way around, 12 I don't need to make you to write. The procedure of registration and all. But just we love to discuss on that. What is it? Income of a trust or institution from contributions, what your section 12 says, as long as you are applying the same for charitable purpose in India, your voluntary contributions without specific direction gets exempted, is a point. Then friends, here one noteworthy point is, there is a charitable religious trust which is running a hospital or a medical institution or an educational institution, and if it is going to provide medical services or educational services to the prohibited category of persons, author of the trust, person who contributed more than 50,000 of the donation, उन लोगों को यदि ये हॉस्पिटल नहीं तो वो एजुकेशनल इंस्टीट्यूशन is going to render services for their benefit, then whatever the value of the service, then such value of the business, such value of the service need to be treated as the income of that particular trust. Although it is not in receipt of the cash from them, the value of it, we have to value it and say that it is the income of the trust. This important point you write. Section 12. The value of any service, the value of any service, being a medical or educational service made available by charitable or religious trust, running a hospital or medical institution or educational institution, to any person referred in Section 13 shall be deemed to be the income of such a trust, and shall be chargeable to income tax, notwithstanding the provisions of section 11. Then friends, I move to 12A. What is 12A? What are the conditions for applicability of section 11 and 12? First thing is, such trust or charitable entity should first make an application for registration with the Commissioner of Income Tax exemptions and should have got registered under section 12AA. Friends, earlier it used to be that retrospectively also they used to provide the exemption, but 3-4 years back they dispensed off with that retrospectively giving the exemption. It can be given only prospectively from the year in which the application is made for registration. The application is made for registration only prospectively, the exemption can be given as a point. Retrospectively it can't be given. Let us suppose on 31st/12/2012, Bhagavan Sri Satyasai High School Alumni Association, a charitable institution, started. We made an application on 2nd of the January. So exemption will come from which year? From the year 11 and 12 onwards. Let us suppose this trust is started 5-6 years back, but today we are making the application. From this year only prospectively the exemption can be given as a point. And another important thing is for you to claim the exemptions under section 11 and 12. In case if the total income of such SSC being a charitable trust or association or entity, if its total income before giving the exemption under 11 and 12 is exceeding 1,80,000 rupees, then it need to necessarily get its accounts audited and the audit report is to be submitted. So, points to be remembered are what? Write down. That is, conditions for applicability of section 11 and 12, conditions for applicability of section 11 and 12 given in 12A, 12 capital A. Number 1, such entity must be registered under section 12AA. Then number 2, exemption will be given from the year in which application was made and not retrospectively, Then friends, third is if income before claiming the exemption, exceeds rupees 1,80,000, then accounts are to be audited. Then friends, what is the procedure of registration given in 12AA? First, an application is to be made. Then after you make an application, they will serve you a notice, ask you to come and provide further information and explanations which they require to get themselves satisfied that it is for a genuine purpose, cause you started with this institution. So once they are satisfied with that, they will grant the registration. If they don't want to grant the registration, that should also be intimated to the SSE and an opportunity of being heard should be given. In any case, friends, please remember, such an order rejecting also should be made within 6 months. I gave the application for registration and they kept quiet for 6 months. It shall be deemed registered. But that is although stated in the law book, that is not happening in the practice. At least on the last day they will issue the notice. Naito, at least they create a backdated notice. Only they will say, we sent it, you are not there. बहुत कुछ बता सकते मगर वो सब हो रहा बोल के नहीं बता रहे. मैं डोंट थिंक दैट यदि उन्होंने नहीं देखे तो हमको डीम्ड रजिस्ट्रेशन आता बोल के आप जाके जरा परस्यू करो. इन केस इफ यू आर नॉट गेटिंग द नोटिस, उनको जाके 1-2 बार प्लीज टेल देम. अदर वे अराउंड, even if you get a deemed registration, subsequently they can trouble you. They can say that you are not done with this, with that, so we are withdrawing it. Okay. But theoretically, yes, for final preparation, You should make a note that any rejection should happen within 6 months, failing of which it shall be a deemed registration. And in any case, whenever you want to slap anybody, first you tell that I want to slap you, explain why you should not be slapped, let him give the explanation. You can say later, I am not satisfied, I am slapping. But in this country, without opportunity of being heard, you can't do anything. Got it? That thing, that protocol. Chalo. वो तो है procedure of a registration. Then see, Commissioner of Income Tax has given the Commissioner of Income Tax exemption, granted the registration. बाद में आप सीढ़ी लगा के विसिल ब्लो करके एक्सिंग ऑफिसर के पास आके, yes sir, I got the exemption, my income got exempted. Can now the exing officer can ask you, is the objects are really you are doing? Are they really charitable? ऐसा पूछ सकते? नहीं पूछ सकते. Who said so? Supreme Court in Surat City Gymkhana verse stated that once CIT exemptions grant the exemption under section, grants that registration under section 12AA, then assessing officer cannot further probe and inquire into the objects of that particular trust. So the assessing officer shall have to treat the trust as a religious and a charitable trust once Commission of Income Tax approved the trust under section 12AA. क्योंकि उनका सुपीरियर ऑफिसर एक्सेप्ट करके दे दिए, तो अब उसमें you can't doubt whether it is really a charitable purpose or not.